What's up, guys? We have a big news week ahead of us, starting with the consumer confidence report. But that's not the biggest thing this week because we also have GDP on Thursday. We have nothing really going on Wednesday. No red folder news, but we have the GDP on Thursday, and the biggest news report we have on Friday is going to be the PCE report, the price consumer expenditure. Okay, this is another take on inflation and the Fed's favorite take on inflation because it shows what's most importantly affecting the consumer. All right, stuff like food, eggs, milk, gas. All right, housing prices, stuff like that. So that's going to be a very important tell to how it's going to affect the Fed's decision next week on their rate hikes. Okay, inflation, they managed to taper inflation a lot from last week. As you know, last year was at an all-time high of 9.1% in June of last year. They managed to bring it down to below 6% year over year this year. So that's very important, and it's also an important gauge to tell, like I said, what they're going to do. They said that they're going to take their foot off the gas, most likely not have another rate hike for the rest of the year, and they can possibly, instead of raising rates, lower the rates now. Okay, taking a foot off of the gas. So these CPI and PPI reports, and especially the PCE report, is very important information for the Fed. All right. Other news also is earnings this week in the tech sector. All right, we have Google, Meta, and Microsoft, huge companies reporting earnings, and the Nasdaq. That makes up tech sector makes up 30% of the Nasdaq, which is why Nasdaq has been making like huge ebbs and flows in the market as opposed to S&P and US 30. Okay, when US 30 and S&P been a little more rangy, Nasdaq has went up almost 20% the first quarter this year due to the tech sector. Okay, so very important to look at. However, the market has been pricing in. Well, they've been expecting a negative report, so they did price in a negative report from the tech sector. Obviously, because of inflation in the economy, making it harder for businesses to get business loans to add to their business operations, along with semiconductor, the supply chain being a problem due to COVID. That's an ongoing problem. But let's see if, although they inspect a negative report, maybe it'll be even more negative. Okay, or it could be positive. All right. To look at the chart, just and I will talk about how this inflation has affected the market. You have this bearish channel, and this is the weekly graph here, and we have the bearish channel of 2022, the beginning to start from January, bearish movement all the way down. Okay, this is US 30, by the way. Okay, but after it being at an all-time high in June of last year. Okay, the market hit lows in September, but then as they started to curb inflation because of rate hikes, um, price started to go up, and in the beginning, well, the end of last year, they started to creep out of this bearish channel. Okay, but then after it got out of this bearish channel, we don't have any more definitive movement. Price has been ranging between this high and the top of the bearish channel. Okay, even a couple of weeks ago in March, it attempted to re-enter this bearish channel, but it bounced off due to more and more good reports on inflation. All right, that's why these reports are very important. All right, it gives the Fed information on what they're going to do with the rate hikes. Okay, although these rate hikes may have a negative effect immediately in the market because of day trade investors, overall it's supposed to go bode well overall for the economy, because while they have to control the rate hike, they also have to maintain full employment, because that's the dual mandate of the Fed: maintaining full employment, but also balancing out the economy. So that's what we have here. So on the weekly chart, do notice that we have this evening star building here on the weekly, and this is the weekly chart. So we have weekly candles. Each of these candles represent a week. Okay, so in an evening star, you have, okay, price makes a high here, and then the second candle, it makes a high but then starts to come down, and then you see this last candle, it went up to like midway of last week's candle and starting to come down a little bit. So it's dojiing right now, but keep in mind it is only Tuesday. Okay, it is only Tuesday, and Tuesday morning. Matter of fact, this is London session 2:30. So maybe based on what we see in the market today, after the consumer sentiment report and during at 10 a.m. Eastern time today, we can see a move. Maybe we'll get a liquidity grab to the upside, and then we'll see price starting to come down, so we can take some good profit today, but also leave in a couple runners to maybe take advantage of a nosedive in the market. All right, and hopefully it's not as choppy as it's been in the last couple weeks. Although we've been profitable, price hasn't take hit all of our take profits. Maybe hit one take profit, go back to break even, or two take profits and come all the way back. So we're looking for some more definitive moves. I predict in the downtrend area, but we'll see. All we can do is make our trading plan based on price points in the market, and we go from there. All right, so I'll be going live a couple of times this week. Hopefully I see you guys there. Talk to you soon.